Welcome back, members. Now, moving on towards the next topic. As a chartered accountants, any transaction which happens, we always think on a tax point of view. How will this be taxed, or how is it the implication on the tax this would be? So, on this agenda, we have CABP Sachin Kumar, who will be talking about the tax impact on the cryptocurrencies. I would request Manjunath M. Hallur, our treasurer, to escort the speaker onto the dais and hand him over with the floral bouquet. I would like to take the privilege of introducing CABP Sachin Kumar sir. He is a fellow member of the Institute of Chartered Accountants of India and an alumnus of the Indian Institute of Management, Bangalore. He is the chief strategic partner of Manohar Chowdhury and Associates, a chartered accountant firm with 26 partners spread across 16 offices in India. He is currently an independent director in Tech Mahindra Kirim Private Limited, a subsidiary of Tech Mahindra, situated in Bangalore, and a non-executive director of a London-based MNC, Infosight Consulting Services Limited. He has wide range of experience in advising and leading the Indian corporates and MNCs on various domestic and international tax matters. He has represented the large corporates and government undertaking before the Income Tax Department and appellate authorities in India. He is a regular speaker at various prominent forums and its visiting faculty at Institute of Chartered Accountants of India and IIM Bangalore. He is the secretary of the Bengaluru ITAT Bar Association as well. With this, I present to you Mr. BP Sachin Kumar. Over to you, sir.
The very basic tenet of our profession, if you look at any other profession, whether you take doctors or engineers vis-a-vis chartered accountants, doctor's accountability is to the patient. When doctor treats a patient, takes the fees, and he gets cured, his accountability is over. Engineer, he comes with, a plan for you, for your office, for which you pay. His accountability to you is done. But not for us. As a chartered accountants, when we sign financial statements about true and fairness of the financial statements, it is not to that company alone. It is to the world at large. Anybody sitting at any corner of the world will look into a financial statement signed by a chartered accountant, and he makes a decision based on that, whether to invest in that company or not. So accountability that we have is huge. So therefore, when we affix our, signature on a financial statements, there is an element of trust that we enjoy. That element of trust is what the other person gets because it is signed by a chartered accountant, right? On these basis, we've been even signing the financial statements. Parallelly, what is happening, the technology has been developing to an extent that the basic tenet of trust, which is there between the client and a chartered accountant, or chartered accountant and the world at large, the element of trust, what is there? That element of trust itself probably will be outsourced in a situation like blockchain technology. Because when we are looking at verifying the books of accounts and coming out with our opinion on a books of accounts, true and fairness of the opinion, right? There are a lot of things that gets into it, the system of sampling of transactions, verifying the transaction, internal control systems. Just imagine if we were to give them a comfort of a, investor or anybody at large, every transaction that has happened through valid internal controls, and it has happened through valid approvals. And so therefore, there is nothing you can do about it, because if you go back and change The technology doesn't allow. Even if it allows, then the other person will be able to get to know that something is changed in the financial statements. So things like this. So therefore, things like this is what is possible in blockchain technology. So, which is what we are going to understand initially, and then move on to what is VDS and taxability of VDS. So when as I said, sometimes back, while we were all taking pictures in our mobile phones, Kodak thought that they will never be, people will never be happy with taking pictures on mobile phones. They would like to see that on a print. They held on to that belief for very long. And so therefore, what happened to Kodak, all of us know. So a situation where the trust element is outsourced to technology. And we say that, and if it has passed through blockchain technology, there is no question of tampering of a transaction. There is no chance of modifying those transaction, and it is a peer-to-peer. It is whatever I have done. There is another person who has viewed it already, reviewed it. So all these things will come to a situation where the element of trust itself gets outsourced to a technology. This has a significant impact on our profession if you look at in the years to come. This is one aspect. The second aspect of this is, let us understand, suppose if this blockchain technology, if we were to adopt in our offices, just a thought, may not happen today or tomorrow, it may happen after 5 years, but with this, there is a possibility of happening. What I'm trying to say, which I'm going to take you through. The question, therefore, what happens is, if we start adopting, see, a few 15 years back, possibly in 2000, I don't think we would have thought the technology or this internet can be used in a way that what we are using it. We would not have even thought about it, right? So considering what happened with technology, internet, and what is likely to happen with blockchain technology, I thought I'll just take you through one small example of what blockchain and how it is going to impact us, and how it will take us to what is called as virtual digital assets. So I'm trying to cover as an agenda, some of the news items that we have, and what are the common platforms for virtual digital assets, and overview of this blockchain technology, and the overview of taxation. And then in overview of taxation, when we discuss in detail, we are looking at factors which determines the taxability, which is what is the residential status, how it impacts this. Then what do you mean by digital virtual assets itself? And then the heads of income where it will be subject to tax and computation. Sorry? It is in full screen here. ನೋಡ್ತೀರಾ ಅದು full screen ಇಲ್ಲಿ ಬರ್ತಾ ಇದೆ. Okay, so we are going to see that where this event of taxation happens in case of blockchain, in case of VDAs. What are the heads of income where it is subject to tax? Will it really matter in these heads of income whether to tax, if it is taxed under profits and gains or capital gains, other sources? Does it really have any impact, or is it okay because it is 30% subject to tax? These are some of the things that we are going to discuss. And of course, TDS and set off of losses. This, if you look at recently, sometime back, you have income tax department issuing notices to 700 crypto investors. And Amitabh Bachchan pays over 1 crore as GST on NFT sale after notice. So there is something, a NFT, how it is going to impact, what is NFT? It's something which we will look into it. I'm sure these are the matters in the first sessions Mr. Jagannathan would have taken you through, but then I'll just take you through from a tax perspective. And some of the common platforms which we know is for cryptocurrencies and NFTs are something, Coins Switch or WazirX or Beyond Life. This is where that Amitabh Bachchan thing happened, right? And So what we try understanding is the virtual digital asset, the underlying factor of virtual digital asset is blockchain. And this blockchain technology, as I said, is it a software or is it a hardware or what is it? Is it a database? It's an ecosystem. It comprises of everything. It's not only a software. It's not only a database. It is an ecosystem in itself, comprising of everything. So this is what is blockchain is a continually growing list of records, which are linked by one block to another block, like something like this. One block to another block. It is linked, and each block contains a hash pointer, and which links one block's hash pointer links to the previous one and the next one. So therefore, immutability it is immutable. You can't change it. If it changes, it is known to everybody, whoever are the participants in that, right? So therefore, the modification becomes quite challenging here. So if you look at any of thing, for example, mm, uh, let us say you buy diamonds. We buy diamonds, right? And we go to a shop and he says it is a diamond, and we pay, let's say, 1 lakh rupees for the diamond. How do we know that it is actually a diamond? Because he says that, we believe. Nowadays, if you look at least some, they have, if it is grading like this, but are we competent even to look into that grading? 1 lakh is, we are paying for what? 1 lakh, we are just paying for the trust we have on him. He says it is diamond, so therefore we are paying and we are taking it. Otherwise, there is absolutely no way you can find out that it is a diamond. And whatever the carat, whatever they talk about, it's only a trust. Same is the case. Even with us, we charge clients man hourly basis. So if we say that for completing a particular project, we took 100 hours, you think client will go through the entire? No, it's a trust. 100 into so many hours. So we have said that it is 100 hours, believing that he pays for that particular man hours. So this is exactly what the technology is going to challenge it and say that if you mean to say it is a diamond, it is a diamond. If you have spent 100 hours, it is 100 hours. That is what is possible through this. As I said, Genesis block means it's a first block, so let's ignore that. The second block, if you look at the data, hash of the previous, which is links it to the previous block, and the data involves there. For example, if you have said it is 100 hours, 100 hours of data for what all you have spent is part of this particular this thing. Suppose if you say that it is a diamond, then what happens is when it is extracted, the diamond is taken out from a particular mine, you have a location map of that mine or lat long of that. So therefore, we know that it has taken from that mine, that raw material. So then it goes to the next processing. It already carries the location of that particular thing, and it goes to Mr. X for processing. And what process he undertakes and how it gets converted and it goes to the retailer, there is. And retailer assigns one number, and then it goes to the showroom. And from showroom, it comes to us. So when it comes to us, we know from which mine it has come, who has processed it, to which retail store, to how it has come to us. Entire sequence we will be able to identify. So therefore, there is a trust. There is a trust that yes, it has come from that mine. So therefore, what I am paying 1 lakh rupees is not that I am believing that person, but I am paying it because it is diamond. Is one of the aspect. That is how this particular blockchain works. If you look at as I said, distributed, it works on a distributed ledger technology. It is not that you have one central server and all are attached to that central server. No. If all of us are participating in one for executing a particular contract, let us say, which is going to come up later, which we call it as, smart contracts. there each of our contribution can be recorded there. And the allocation of fees which happens, which we would have understood earlier, on that basis, it gets triggered. Right? So basically, if you look at it, is not from a single source that it happens. It is a distributed. What information I have, you have same information because you are part of that particular technology. So therefore, nothing that one central server is taking care of all these things. No, it is not like that. Individually, we become all the servers. So therefore, problem what happens, advantage is, suppose, let us say, if traditionally what used to happen, I maintain that particular database, and if it gets corrupted, none of you could have accessed that. But in this particular, it is not like that. If mine is corrupted, yours is there. Yours is corrupted, his is there. His is corrupted, somebody else is there. So therefore, we will be able to retrieve that aspect as well. So therefore, from that perspective, distributed ledger technology works. And of course, ledger, I don't have to tell you, it is a recording of a commercial transaction. So that gives rise to this Bitcoins and cryptocurrencies, which I'll not, that is not the subject matter of discussion, so I'll not get into that. Again, public and permissioned blockchains are there. I'll not get into it, as I said, at this particular point of time. What is important is the smart contracts. So this is exactly how, the ecosystem of blockchain works. In that, the smart contract, I would like to take you through how it happens in a company, let's say with us. I'm from Manohar Chaudhary and Associates, let's say MCA. Let me call it as MCA. And I have some MCA coins. It is MCA coins is nothing but not those coins. It is only a software. Let's say we develop a kind of a virtual digital asset. And how it happens is something like this. MCA Treasury allocates its coins to different offices of MCA. We have 16 offices. It allocates to 16 offices. It's MCA coins, right? And then there is something like consulting operation happens. Consulting operation happens at Hyderabad. Whereas the client is from Dubai. We have office in Dubai. So therefore, client comes from Dubai and consulting happens from Hyderabad. And there is something review happens from, let's say, Bangalore. So this is typically, let us look at it like this. And then internally, as far as we are concerned, we know that how much Hyderabad office should get because it is executing, how much Dubai office should get because they are referring, how much I should get because Bangalore should get because I am reviewing it. It is understood internally. So that becomes a part of the smart contract. Now, after that, if client says, with the client, we say that 100 hours, that 100 hours is part of this application. So therefore, the minute you start that work, let us say you switch on that mobile application and start working on that so that everybody knows what is happening in that, who is spent or what, how many hours, all these things, and execute that particular assignment. And the minute it is executed, it triggers execution of payment of money, and the money comes to client. From client to us, it gets distributed to all the partners, which is already pre-decided by way of a smart contract. So what happens? Absolutely, whatever you have spent, whatever was agreed, it gets distributed. This is one. Second is, we will not get into year-end reconciliation. It happens then and there. No question of year-end reconciliation, how much to Bangalore office, how much to Hyderabad office, how much to Dubai office may not be a consideration, may not be an issue at all, because this technology brings in what is called as single version of truth. There is no multiple version of truth. It's only single version of truth. What is single version of truth? Let's say at the end of the year, my balance shows something and your balance shows something. We sit and reconcile, right? That reconciliation issue will not come at all in case of blockchain technology, because there is what is called a single version of truth, right? So therefore, there are other benefits that you will have. For example, faster reconciliation, as I said. Audit trail in this particular case is made easier. As I said, the element of trust itself gets also outsourced so to a technology. So therefore, audit trail becomes easier, payment distribution happens very good, and cash transaction obviously is reduced. These are some of the advantages that we have as far as blockchain technology is concerned. Which leads us to this technology is what leads us to what is called as virtual digital assets. The MCA coin, what I mentioned here in this example, is nothing but a virtual digital asset. So using that digital asset, I'm carrying out my transactions within the organization. So therefore, by doing that, what is happening? Immutability, one, it cannot be changed, whatever transaction that has happened, and easier distribution of money, and there is what is called a single version of truth. All these advantages are forming part of it. So therefore, there is a huge amount of interest in this particular space as far as clients, as far as people are concerned. So therefore, if you look at it, reduces multiple hops between parties, reducing transaction time. In fact, interestingly, it so happened that we were getting regularly this form 15CA, 15CB works from one of the family, one of the high net worth family. We used to get that. And obviously, they used to transfer money from here to US. And you had to undergo so much of a transaction time and so much of a formalities. All these things used to happen. And if you trigger today, if they want money, if a mail has come from there that I want, let's say $100,000, generally it used to take about 7 days for him to reach, because it has to come to us. We have to certify, then bank from this bank to that bank, and generally about 7 days, even if you really efficiently do it. Considering Saturdays and Sundays, that means only 5 days we have, right? I was surprised. This particular 15CA, 15CB was not coming to me for 2 months, 3 months. Two possibilities. One, that boy would have come back from US, or client would have felt, no, I'll not be there with MCA, I'll go to somebody else. One of the two things, I was certain. I called up client and he says, no, son has not come. He's there. He still continues to be there in US. I said, are you not sending money? We sent money. Who's signing that form 15CA, 15CB? Why you required form 15CA? He asked me. Arey bhai, so many days, so many months we have been doing it, and now, no, sir. This virtual digital asset, sir. Crypto. So it's that I initiate it here and he receives it there. That's all. Is what he was telling me. He saved on my fees. He saved on transaction cost of the bank. And we need not have to wait for 7 days. It's an interesting phenomenon. In fact, the other day, myself and Vivek, we were discussing on. It seems Vivek asked his daughter, would you pay so much for, that metaverse clothes? You have to pay. And the answer, it appears, came from us saying that, yes, I'm ready to pay. The next generation, they have adopted to this so well that it would certainly take a challenging thing for us to adopt to this technology. No doubt it is easier. No doubt it is not as difficult as any other technology, because technology today has become so smart. We don't have to be smart to understand technology. Technology is smart to understand us and adapt to us today. Right? But then we have to know the changing scenarios, market intelligence, so to say, what we call. Are we picking up the market intelligence? This to me was a market intelligence, because the next generation of people, for virtual clothes, they are ready to pay. It's a market intelligence for me. Now the question is, having taken that market intelligence, what is that we are going to do? How is that we are going to use it in our day-to-day work? And what is that we can foresee? What opportunities are there for chartered accountants in this particular segment? Right? So this efficiency improves, and there is a cost savings, and it happens fast, and the transparency is there between all the parties. So all these things has created an enormous amount of trust in this particular virtual digital asset. So therefore, The question whether it will stay, 100% it will stay. The question it won't. But the thing is, to what extent government can regulate it, how, that is a question which we can debate. That is the reason they could not have said it is illegal. They have made it very difficult for people to do it, but they cannot say that it is illegal. They have been advising people not to invest in. They cannot say that it is illegal things what you are doing. They are sending notices to them crypto investors, but then they are not saying that it is illegal. It's an advisory. So the question is, these are the things that are here to stay, one. And when we look at transactions in future, the question is that 15CA, 15CB, do I have to call him and still tell him that, boss, this is a technology, but then you are not complying with income tax provisions. You will get into a problem. Do we really have to counsel him on those lines? Are the questions that we need to really deliberate upon. So, coming to now, taxability is concerned. See, in this taxability, let me be very honest at the beginning of this particular session. I've taken very extreme views. Extreme views I've taken. Let me, not because, that is what the interpretation is, because I'm taken an extreme view, simply because to trigger thoughts, that's it. To say that, what do you have to say? If somebody were to take this extreme thought, saying that the donor himself is subject to tax in VDAs. Donor, though while donee under section 56 is subject to tax, if I were to challenge and say that no, donor is also subject to tax here, it's an extreme thought. But then let's explore what is there. Let's explore. Okay, so with that, let us get into the taxability of this VDAs. So new sections introduced and existing sections modified, right? 115 BBH tax on income from virtual digital assets applicable from financial year 22-23, and tax on gift of virtual digital assets again from financial year 22-23, and this payment on transfer of virtual digital assets, that TDS on payment of on transfer of virtual digital assets. It is applicable from 1st July 22, right? So this is as far as year of applicability is concerned. So 22-23 onwards, if you look at, it's a new regime for VDA. So what happens for 21-22, the previous year, the 21-22, it will go under the normal provisions, whatever have been general principles of accounting, general principles of taxation, what has been laid out. It continues to apply for this. From 22-23 onwards, this 115 BBH will kick in. When I was going through it, it appeared to me that it is only 115 BBH and a couple of paragraphs. But if you deep dive into that particular thing, you feel that it is a code in itself. 115 BBH is a code in itself. Because it says notwithstanding anything. So forget all other things. You listen to what I say is what 115 BBH says. And if you get into delve into it in deeper detail, to my mind, it isn't code in itself. If you are entering into a virtual digital asset transaction, I think you have to first go to 115 BBH. Why I say that is because it impacts the residential status, it impacts how income gets accrued, status of assets, heads of income, deductions, tax rates, set off, DTA provisions, all these things, it has an impact one way or the other. So therefore, I have made that statement that it is a code in itself. Now, let's look at how it is going to impact the residential status. So we have ROR, NOR, and non-resident, or 3 residential status for individuals. Income from transfer of VDA held as capital asset. We will get into the details of the definition and all those things later, but then just to understand from the perspective fundamentally how residential status has an impact on this. So if you look at income from transfer of VDA, If you are a resident and ordinary resident, yes, it is subject to tax here in India. If it is a non-resident and not ordinary resident, if the situs of VDA is not here, then it is not subject to tax. The question is, if it is a situs is here, it is subject to tax. The question is, how do you determine the situs of VDA? Because in a blockchain technology, if the traditional databases, I can always say that this database, this server is here in Bangalore. So therefore, it is subject to tax here in Bangalore. One view, at least we could have. But then in blockchain, in a VDA, in a blockchain technology, that server is there with everyone. If the market participants are across the world and everyone has this information on their hard disk, how do we say that? And virtual contract, when it is entered into, it is not entered into in India, because from here I entered into a contract with my Dubai office, my US office I entered into. Where do you say it is getting executed? Where do you say that the situs is located? Is a challenge. Is definitely going to be a challenge. It is easy to say that here I have said situs is outside India. So if it is situs is outside India, NOR is not subject to tax, NR is not subject to tax, is very easy to say. But the very fact that to prove that the situs is outside India will be a challenge for us. This is one aspect. Income from transfer of VDA, where it's a trading activity. It's a trading activity. Instead of currency, we do a VDA. So if it's a trading activity, then the question is, yes, if you're a resident and ordinary resident, it is subject to tax. If you are not ordinary resident, then it is subject to tax, provided the business is controlled from India. But what is important is, if it is a business transaction, if it is not a capital asset, I'm not investing as a capital asset. It's only invest there as a current asset. Let us say, do we really get into the question of 115 BPH? If the answer is yes, how do you compute the income? Because what is the cost of acquisition that we will have for that? Are some of the things which we will delve in detail, but these are some of the challenges we will certainly face. And of course, TDS on transfer of VDA, it is newly introduced section 194. Yes, it is applicable resident and or not ordinary resident and ordinary resident. And for NOR and NR, it is under 195. These are subject to tax based on the facts of each of the case. So therefore, one of the thing that one of our client, where they were trading, wanted to trade in this, we gave them all the RBI circulars and the regulatory implications. But then he wanted to get into this business. He had to leave India because of the restrictions that are there. He had to leave India, go himself, settle down there in another country and start doing this particular activity. While it is so, if he has decided to go there, might as well let him open another bank account there instead of using the Indian bank account. Because as I said, the situs of this will be quite challenging to say. Tomorrow, it should not work out saying that you have a bank account here, so therefore the situs is here. Is one of the thought that we have to look into. Now let's even look into trading, how it happens. Let's say trading in this virtual digital asset. Let's say FCO, which has no PE in India, and it sells goods to Indian company, and payment happens through VDA. Let us take this particular aspect. So one limb of a transaction here is import of goods. So that is quite clear. There is absolutely no confusion as far as import of goods to Indian company is concerned. So therefore, there is no P in India. Therefore, no income accrues in India. No question of TDS and all those things as far as the sale of goods is concerned. The question is, what happens for the payment through VDA? Because it is not a currency. it is only a barter system? Do we say that it is a barter system? Or do we say that it is consideration that is paid for acquiring this sale of goods? So therefore, value of the sale of goods is what I consider as a value of this particular VDA. Or if VDA is, are there in some of the exchanges and it is traded, so we have the value of those VDAs from those exchanges. Can we take those value of those exchanges? There is absolutely no clarity as far as this is concerned, but then these are the things that we need to ponder. So therefore, if we were to traditionally look at it, because it is income not accruing in India, because it is a purchase transaction and there is no PE in India, so therefore we can say that no TDSs need to be done under 195. Is a position one I thought we can take. So therefore, can department go ahead and say that no, because it is a payment of consideration happening through virtual digital asset. So I'll invoke 115 BBH because the transfer is happening and the situs of that asset is here in India. And so therefore, if it is not happening, I can't reach out to FCO. Therefore, can I consider ICO as a representative associate and make ICO pay tax on behalf of FCO? Traditionally, if you look at it, it is not possible because it is only a purchase of raw material and no PE in India. So therefore, not subject to tax. It's very clear. When it is not at all subject to tax, where's the question of 163 applicability? If it is, when it is 163 is applicable, when there is an income here, there is a tax liability here, then it is applicable. There is no tax liability at all. Where's the question of? This could be the one set of argument that we will have. As a chartered accountant, yes, we will have. The department, can it take a very aggressive stand and say that no, what you are selling is also an asset, so that asset is here in India, this virtual asset, so therefore the situs is here in India, so therefore you have to pay taxes, is a question which possibly may come up in the years to come. So yes, possible. That is exactly, that possibility is there. Therefore, government itself will come back with some of the in the next couple of slides. I'm going to take you through how government is planning to uh, you know uh, make this an attempt by the government to see that how it can be regulated. They say that some of the NFTs we are going to notify it. Those NFTs are not VDAs. All those things are there now. We will look into that aspect of. Yeah. See, RBI has given an advisory. This cannot be treated as a currency at all. You cannot call it as a currency. It is not a currency. RBI has given an advisory saying that don't involve in this, and which is what we also recommend. Don't get into crypto asset. I mean, in the sense, cryptocurrencies trading in that. No, we also recommend not to do that. But then these are situations where the VDAs, there is a possibility a VDA may be recognized by the government. A VDA may not be recognized by the government. Now, how it happens? This is exactly what we are trying to work around. I mean, discuss here. It can never be a currency. If it is a currency, then this discussion itself is not there for us. If it's a currency, then this discussion, it doesn't call for this discussion at all. Because you take services, you purchased it, you gave a currency. It goes to a traditional or whatever we have been doing it so far. So the question is, it is not a currency, therefore these questions are coming up. and say that no, that asset, the situs can be treated as India. If it is in India, because you are transferring the capital gains, the income gets accrued here in India. Other interesting phenomena. 100%. Yes, legal implications also will be there. That is the reason why we have one of the speaker coming in to explain on the legal implications. See, while I have told you here that you take goods and you give virtual currency, it's just for to understand the income tax provisions I have said. This is not possible because you cannot use it as a valid currency at all. At the first place, this I said MCA coin. It's a coin just to mention, drive home the fact what is possible out of this technology. I can't do that because I can't replace that coin with currency. No. But possibility can I will say okay, I will not. Just for reconciliation purposes, I'll do it. MCA coin, I'll use it. Year end, I have to do it with my 26 offices. It's a huge exercise for me. Huge exercise. Literally, it's a huge exercise. Reconciling between each of the. I say, okay, I'll allot you these coins. And it gets triggered. And so therefore, at the end of the year, I convert it into this value and I put it in my financial statements. It is internal arrangement. So even if it is internal arrangement, if it is not recognized by, let us assume, if it is not recognized as a VDA, it is not recognized as a VDA, let us say, how it is going to impact that? Now, between branches from different states, GST is applicable for us, right? So similar thing get attracted here because I have 16 offices and I have offices abroad. So while doing that, will they say that, no, I don't consider this is subject to tax? So that's an interesting phenomena. I try to put it. Okay. So then now non-resident investing in India. One is doing a business using this and another one is investing. FCO makes a FDI investment through Bitcoin. As I said, this legally when they come back, they will say, no, you can't do that. But the question is, it is interesting to understand, suppose tomorrow they come out with NFT. This is recognized NFT. Instead of this Bitcoin, you put it as NFT. And then let's see. Now, all of a sudden, it is changing its flavor, right? Instead of Bitcoin, what is there, just put it as NFT and it is recognized by government. Isn't it? So those are the things just because we don't have any recognized thing, but we know the direction. We know how the government is thinking. In that direction, I want to increase efficiency of my organization using this technology. I would like to do it. In the process, what could be the challenges from the government? It's an interesting dimension to looking into all these things. Otherwise, what is there? Only 2 sections I have to discuss and go, right? This is the dimension. That's it. Yeah. Absolutely. It's happening. Yes. Yes. Yeah. In fact, that's what when I started, 2 of the thing that we discussed. One was my client not coming to me. That was a brilliant market intelligence because if one client has done that, we have to be very careful about other clients now. If they take the same route, we have to either educate them or we have to educate them. There is no other way. What is that we need to do then? It's a market intelligence. Okay, so there is absolutely no express restriction. But if you go to a bank and say that I want to take money out, they will ask why. Say that investment in crypto, they will not allow. As a share capital, Exactly. These are the challenges. Exactly. You are right. So it's therefore government is coming out with NFTs. They say that we will recognize these things and those things are not VDAs is one aspect. Suppose if they don't recognize, then we have to go to 115 BBH, pay 30% on that. The question is if we want to pay 30%, how do you determine the value of that? These are all the challenges. Which one, sir? Oh, in the example what I gave. Yeah, yeah, yeah. It's not a gifted, it is some regular transaction had to happen. That facts of the case may not be relevant, so therefore I'm not discussing. What is relevant is something happened which affected our profession. Something happened outside, it affected our profession, and it affected because of this technology is what I wanted to drive home that fact. So the question whether 15 CA is required, not required, I'm not into that discussion. Let's take a transaction where 15 CA, 15 C is applicable. Now all of a sudden that gentleman is not coming to me. If you go and look into it, the thing is he has already transferred money, and how he has transferred money using this crypto is a concern, matter of concern, which is they should not be, ideally they should not be doing it. Even under Income Tax Act, that income, whatever is there out of that, we have to determine, go to a chartered accountant. If it is no income, then get that certificate and then take that money out. Isn't it? Now, just because, let's look at it. For example, forget about a father and a son. If it has happened between two independent parties, he sold some product to you, let's say a pen to you, very expensive pen, and you paid by way of Bitcoin. Possibility, right? And that gentleman has been doing it regularly, not one of a transaction. These pens is selling it to hundreds and thousands of people here in India. So it's like that. Thing is, we are trying to see that how the first aspect of that example is how it is impacting our profession. Now we are looking into it. If it happens actually, what would be the tax implications? As I said, as it evolves, the legality, illegality, all these things, there will be a clarity. We know at least the direction which government has taken. Government has not taken like El Salvador. It says, no, no, I will recognize that also they have not taken that extreme. Or another extreme is, no, I'll ban all cryptos. Both extremes they have not taken. They are trying to go tread a middle path. So this was, first of all, this was required for us. When so much of a transaction is happening, this clarity was required. At least we know. Now, having known the direction where we are going, the question is, the law will evolve in this particular direction. Law will evolve by way of these kind of deliberations. Okay. So again, even if it were to investment were to happen through Bitcoin, allotment of shares to happen, valuation issues. So while we value shares is one aspect of the matter. How do you value that what you are given against those shares, that Bitcoin? How do you value that? Market price is if it is traded in a exchange, yes, that is. If it is not traded. Yeah, that is what the volatility is too much here. I agree with you. That's exactly the reason why we brought it here. As simple as investment, if it happens through Bitcoin, as simple as trading happens through Bitcoin. What are the challenges we are? Do we have the answer? No, but we know the direction which government is taking. So let's deliberate upon it. So if you look at the government, the the finance bill that has recently passed, and what it says about virtual digital assets, the explanations and the definition of virtual digital assets. If you look at it, they have three clauses mainly, and yeah. Um, so therefore, in clause A, if you look at, they talk about Bitcoin, I'm sorry, the virtual digital asset as a information or a code or a number. Information, the characteristic of the virtual digital asset. So if you look at Bitcoin or Ethereum or any of these things, yes, they are a information, they are a code. Bitcoin registered as a legal, El Salvador, which has recognized it. It is the interesting phenomena happens subsequently when we discuss, because in an international scenario, you say that I'm receiving money from El Salvador, and they have recognized it as a currency. Because they have recognized it as a currency, does it become a currency here in India? In other countries, it is not recognized as currency at all. But a country which is recognized, so therefore is it a currency? And so therefore, if it were to be a currency, then is VDA not applicable at all? If this transaction happens through El Salvador, then this doesn't go into a regime of 115 BBH. Of course, there is a huge international pressure on El Salvador to take back that position. There is a huge pressure because this is going to be a challenge. Like how we had a tax havens, tax neutral jurisdictions. This could be one such thing. Okay, let's go by element by element. It is an information or a code or a number or a token is what one of the characteristic of VDA. So these bitcoins and these food coupons, what corporates get, and the wallet points that we get, and shares and mutual funds derivatives, which are in a dematerialized form, Is it an information, code, or a number or token? Yes, they are. Next, not an Indian or foreign currency. It is not an Indian currency, not a foreign currency. Therefore, it qualifies as a VDA. Now, it is not Indian currency, fine. As I said, El Salvador recognizes it as a currency. Now, it is a foreign currency. So, tomorrow, if it were to be allowed, everybody will have set up their shop in El Salvador, and the transaction will happen, like how it was happening in Mauritius or Singapore. Could be an interesting proposition here. Food coupons is not a currency, not a foreign currency, not an Indian currency. Points in e-wallet or cards, yes, they are not a currency. If you look at these things, all these things are the tick marks for the definition of VDA. So one is it is an information code, it is ticked. Is it no, Indian currency, foreign currency? They are not. It is ticked. And third, generated through cryptographic means or otherwise, yes, all these things, whether it is a Bitcoin, food coupons, or e-wallets, all are kind of a cryptographic generated, that program. Otherwise, it is not possible to have that system at all. So therefore, that is also ticked. Third item is ticked. It can be transferred, stored, or traded electronically. Can it be traded? Bitcoin, yes, it can be traded. Can shares and mutual funds derived in demat can be traded? It can be traded. But of course, in one aspect, we can leave out shares and mutual funds is because it has a separate taxation regime. For a minute, if we were to take it out and say that, no, let us not even take that for this discussion, is a possible way to argue, no doubt. But in case of other aspects, if you look at, it provides a digital representation of value exchanged. In all these things, it provides a digital, representation of a value exchanged. It is used as any financial transaction or instrument. Yes, it is used as financial transaction or instrument. Almost all these things get ticked. So therefore, can we consider in food coupons and points as kind of virtual digital assets? The only way where we've been trying to do our research and we find out that no, at least in case of food coupons and points in e-wallets, they cannot be a VDA because they cannot be transferred or traded. No, so what happens if it were to be food coupons can be given to somebody else would. I mean, there is an interesting, as I said, interesting dimension to every aspect of this transaction. Okay, so yeah, correct. No exception given. Therefore, why I have my assumption, Vivek, I have said separate regime for taxation. Just because it is a separate regime for taxation, I'm not considering it. If you take that out, yes, it can be a VDA. As of today, it gets covered. Yes, yes, yes. But my assumption, as I said, because it is a separate chapter, so let us not consider is one of the view that I have taken. Yes, if department were to take that aggressive stand, yes, possible to take that aggressive stand. Yeah, yeah, yeah. So if when all these things are ticked as yes, all these parameters are ticked as yes, then it will be treated as VDA. So the interesting point that comes is if it is treated as VDA, you go to 115 BBH and pay 30% tax. Now, suppose if it is not a VDA, one of the parameter not fulfilled, it is not a VDA. Can we take a stand saying that because it is not falling into 115 BBH, it is exempt? As I said, I'm taking extreme view. That is why I started my discussion saying I'm going to take extreme views. Where is residuary section? 115 BBH, what it says, notwithstanding anything. Start with not non-abstentive clause. It is a code in itself, as I said. That is why I said it is a code in itself. It is a non-abstentive clause. So therefore, either you tax it here or because you are not coming under here, I'll say that I'll take it is exempt. It is not subject to tax. Can we take that? Possibility. I'm just like how Vivek just now said it is, they are all possibilities yet. This is just to trigger the thought process for us to say what extreme views can be taken. Yeah, correct. It is not a VDA. That's regular provision supply is one view. My question, Vivek, because 115 BBS is notwithstanding anything, and you are fulfilling all these things, all the, for example, what you mentioned, somewhere we said food coupons cannot be transferred. Only on that ground we have said, suppose if food coupons is transferable, I gave it to you, you redeemed it, let us say. Exactly right. Yeah, then there is a tax. Suppose because a person who has received food coupon he has already paid tax elsewhere. He has already paid tax elsewhere as a perquisite, and it has come to us. Now, because it is a VDA, you are redeeming it. Will it be again subject to tax because you are redeeming it? Let me put it in another way. See, generally, it is donor based. Gift is a donor based taxation here in India, right? Because this has become a VDA now. Therefore, on transfer of VDA, is there an element of income on which I would like to tax? Is, as I said, is an extreme thought. Extreme thought I'm taking. If it were to be a currency, this doesn't happen. Because it is a VDA, there is an element of possibly, as she said, because it is volatile. When I entered into transaction, I had some value. While I'm executing the transaction, there is a value. There is an income element. So on that, do we have to really? Is a thought that you know Absolutely. It would be quite challenging to, but we need to disclose it's one aspect, but it's going to be, yep. On that day, that's what, if it is traded, what is that traded? If it is not traded, it's going to be a challenge. We don't know how it is. That is what in case of a barter system. I give Bitcoin, I take Ethereum. How do we do it? If I see to my that's a wonderful question, Ari. Question, Vivek. Vivek, what I was undergoing this particular thought process. To my mind, how I have reconciled may not be correct. This is, but this is how I have tried to reconcile. Is that if VDA is traded as an investment, then that particular issue comes up. Taxability of it. If VDA is taken as just a medium of exchange, then nothing gets taxed, is what is my view. Because VDA, only through VDA, I am trying to do business with El Salvador, let us assume. A client in El Salvador, I am doing only through that. Because it is only happening through a currency, there is no income embedded in it. I don't end up going into 115 BBH at all. Now, the question is, suppose if it were to happen through as an investment, then possibly yes. Question of going to 115 BBH and whether or not all those things will come. No, no. Exactly. That's the moot question. That's a moot question when I transfer it. Therefore, Vivek, that is what the earlier question of mine, it becomes kind of a donor taxation. Donor anyway will pay because he is receiving it. Donor also the likelihood that he will end up paying it. No, it is not. So, but possibility is there, is what my extreme view, as I said. Extreme view is that the possibility is there, as you rightly said. Correct. The question is wallet. Wallet is easy to identify, let us say. Wallet is easy to do that. The question is if it is in a transaction which is there in the blockchain technology, where each one of us have that information. Where do you say that the wallet is? Wallet is with me, wallet is with you as well. It is on that system. Everyone's system. It's everyone's system. So how will you say that it is there? She brought it from there to here. That question itself doesn't arise. That wallet for getting transferred from that country to this country. It is there everywhere. Correct. No, no idea. Absolutely. We don't know the scientists. So therefore, let's move on to the next tax implications. With all these things, let us say we have categorized certain transaction as VDA. If it is considered as VDA, we go to 115 BBH and 30% taxes there. And if it is not taxable, even though it is categorized as VDA, in case of non-resident, not ordinary resident, which we discussed, where the situs is, how situs is a question mark, but then situs were to be outside India, then it will not be subject to tax, even though it is a VDA. Suppose if it is not considered as a VDA, what happens? Then we have to look at a transaction up to 31st March 22, which is taxed under normal regime. And from April 22 onwards, a new regime that kicks in, and that is as far as taxability is concerned. In case of VDAs not considered, in case of assets which are not considered as VDA. If it is, let us say, when it is not taxable, it is not taxable if NFTs, let us assume, are not recognized currently. None of the NFTs are recognized by the government. So, as I said, can we take an extreme view and say that it is not subject to tax at all? Because it says, notwithstanding the fact and all those things. So, because it is not notified, can we take an extreme view and say that no, it is not subject to tax, or we say that no, we go to the old whatever regime is there, other, and tax it according to that? Let us assume another extreme, another thing, let us look into it. They say NFT is notified. Now, currently, so many NFTs are there. So many NFTs are there, as we discussed, and many more are getting generated. Now, how will you notify it? What NFT, how government is going to notify what NFT is a VDA, what NFT is not a VDA? It is not a VDA. If it is notified. Yeah. They don't say all NFTs are VDA. If it has to be notified, then it is then it is. No clarity on that. That's exactly how government is going to notify NFTs. They say we will notify NFTs. If they have notified NFTs is one. If they have not notified NFTs, and how do they notify NFTs? No clarity even on that count. Yeah. Yeah, yeah. Um, sorry, just a minute. Take this out. Okay. So this particular thing, Vivek, this particular thing in this, if you look at NFTs, that comes under clause B and clause C. How we have put in clause A is one. In clause B, NFT is notified, NFT is not notified. NFT is notified, then it becomes a VDA. NFT not notified, it is not a VDA. The question itself is how will they notify is one of the thought. No. Yeah. So, as I said, as far as these assets are concerned, these VDAs are concerned, if it is used as a medium, I mean, again, this, as I said, it is my interpretation of the provisions, and it may have different, perspective to it. Transactions which are used for convenience sake, like as I said, NRI making a remittance to Indian parents. So instead of using his currency and doing that transaction, if he uses this VDN and transfers the money, there to my mind there won't be any income that is generated out of that particular transaction. So the thing is, it should not be even subject to tax for the simple reason that the basic tenet of income tax, where the income has to be generated for it to be taxed itself, is not there here. So therefore, going ahead and saying that just because you have used some kind of a asset, virtual assets, therefore I'm going to tax 30% on that is little too far-fetched. Exactly value difference. Because of that volatility and all those things, exactly there is a value difference. But the question is, if we were to say that it is used as a medium of conversion, medium of conversion, not as an investment, not for business purposes. It's only I have traded some of the goods. and they are allowing us to, trade in, let's say, pay cryptocurrency. One of the leading manufacturing cars, they said, yes, we will take cryptos. Now, if we were to pay cryptos and buy it. So, on that crypto, will you still be able to collect taxes on that? My question is, it is not. It is just a medium of exchange. Because that value of the car I know, therefore I have taken, and I'm giving a crypto currency. So, therefore, there is no change. There should not be any taxability as far as this transaction is concerned, is what is my view. Possibility department may say that the value of it when you entered into transaction was this, but then at the time of settlement is like this. So you made an income of so much, therefore we tax it. Possibility is there. Yes. Yes. Will it be treated something in line with foreign exchange losses or gains? Possible. That is one of the interesting this thing to look into. As they do it in case of foreign exchange losses or gains, will these gains also be in line with those foreign exchange gains or losses? Could be an interesting phenomena too. True. So now playing this online games, many of the online games, they accept these virtual currencies. They say you okay, pay by virtual currency. And look at sometimes the convenience for a cryptocurrency is accepted across the world, and for the traveler who goes from India or from any country, an accepted cryptocurrency across the world, and they are able to redeem it. And so to my mind, where there is this clarity is not there in the act right now. This clarity is not there, but this kind of a clarity would put enormous amount of comfort to people dealing in this particular transactions. Because for the sake of convenience, if something is being done, there is no question of element of income there. Where's the question of taxing those transactions? Because it fails the basic tenet of taxation itself. Without an income being there, you want to tax it. It's not a right way to do it. That is why they say, can transfer of VDA cover under not otherwise taxable? That's a question. Yeah, this is exactly what non-fungible tokens. So why this non-fungible tokens? As we said, it is under blockchain technology. The person who creates that, has that, creates that genesis block, the first block he creates, and he says that okay, you take it. Another person, the other person can use it, or he may allow it to be used by somebody else, so that he can collect royalty out of that, allowing this kind of any of the arts, paintings, graphic characters for being displayed. uh, a royalty may be paid. I displayed for a day, so therefore this is a royalty to be paid. And whether it is originally of that particular painter or somebody else, we don't know that. This non-fungible tokens, they provide that kind of a certainty, like how we spoke about the gold, diamond. Now we know that if we are taking a diamond, we know that it has come from this particular place, South Africa, this particular mine. So like that, we know that this particular thing, how it is, who has painted it, when it was completed, and how many hands it has changed. All these things can be a matter which can be identified. So that is what this non-fungible tokens are. So as I said, this taxation is NFT is considered as VDA only if it is notified, which the discussion we had. As we discussed, it is millions of NFTs are already there being traded across the world. How is that government going to notify it is a big question. We will have to watch and wait and watch. NFT is not notified. It is not considered as VDA under Clause B, not considered as even under Clause A, right? As I discussed already, can we take a aggressive stand because it is uh, not subject to tax under 115 BBH? So can we say that it is not taxable at all, or taxable under normal provisions? So if non-fungible tokens are taken and I retain that asset, but then I allow it to many of the people to use it, can the remuneration, what we get, consideration we get, be treated as royalty in that particular case? Possibility. These are all possible. Uh, yeah. Why this question came up is that as far as they are going to define it, it is fine. If they are going to, as may be defined, if they had said it is fine, as may be defined by the board or whatever they say. But here they say I'm going to notify, like how they have been notifying for ATG. This institution is under ATG. Exactly, exactly, absolutely, exactly. The definition, can you bring in a definition by way of a notification? No, not possible. Definition you cannot bring in by way of a notification. By way of a notification, you can identify. That's exactly the question is, Vivek. If they had said, as may be defined, or they take a definition, take time and define it. Under the act, it is fine. They say, we will notify. So who will notify? CBDT will notify. CBDT cannot define. They have to notify. Now, how will they notify? A, B, C are NFTs, are tangible, I mean, non-fungible tokens, or XYZ are not. Or when we do that, how many are there now? How will you do that? That's exactly the point. That's exactly the point. Either they have to bring, as you rightly said, definition. Change the definition. Fine, agreeable. You can't say notify. Notify, the CBDT cannot define now. That's the precise question here. Now, categorization of NFTs as VDA could be, of course, this could be challenged. We will look at it. Now, if you look at, as I said, this, I think we have discussed this. I would not like to go through, repeat it again. So, yeah, this also, I think we have done it. Because yes, in case of a barter exchange, A transfers 15 Bitcoins to B and B transfers 30 Ethereum to A. Now, suppose if the taxation were to happen under 115 BBH, who has to pay tax? Both have to pay tax. Both. One transaction, two tax. This is one possibility. Who has to do TDS? Both have to do TDS. Both have to do TDS under 194S. That's exactly what I began my discussion saying, that valuation itself is not defined here. How do you value this? We don't know. So therefore you can take a contention just because I'm saying you enter into this transaction and say that I can't define how much to deduct tax because computation fails. I don't know the computation. Therefore computation fails. Therefore taxation should fail. There are no concrete answers yet on all these things. It is only a kind of a deliberations that we can have. It is at a very infancy stage. See, that is why the best the government right now has done, at least they have given a direction to think. We didn't know earlier whether they will accept this as a legal tender, they will ban it altogether. These are the two extreme things. Now that they say we are not going to do both, we are going to, anyway, it is going to be, they have understood that it is going to be there. Now, having been taking into consideration that this is something, a transaction is going to happen, it is not illegal. How do we collect taxes? They have taken a path and say that, I'll not allow you set off of losses, I'll not allow you any deduction, you pay tax at 30%. Is what they have taken. So that direction we are going. In the process of that direction, these are small challenges. Valuation, how do we do? If it happens a barter system, then is it one transaction, two taxes? Then fundamentally the income tax, tenet of income tax, one income cannot be taxed twice. This is getting challenged here. Exactly. Okay. This is, I think, again, as we discussed, suppose if bonus is paid by way of a Bitcoin, how it happens in case of employee. So is it that uh, Indian company has to pay tax at 115 BBH? Donor based, is it a donor based taxation? Yeah, that at least to that extent we can look at it, because intention, it all depends upon, if I were to keep it, if I've kept it as an investment, I'll put it as an investment. If I'm using it to trade it, possibly I'll put it as my. In fact, this is exactly one of the discussion we had. We said MCA coin, there is a deliberation, it happened even within our organization. Just for the sake of understanding the subject, if we were to do it, that MCA coin, where will you keep it? In the balance sheet, where will you keep it? So, and then at the end of the year, if that reconciliation happens, it gets closed. So they said nothing will come onto the balance sheet. It is only internal. I mean, these are some of the things. Yes, we don't know these things, how it is going to translate it into, but at least we know that what issues are there. Uh, yeah, it is not that it is illegal. It is not you, but you where you are using currency, then it has to be by the what government, RBI has notified. That currency alone you have to use. Barter system is not that it is illegal. Valid contract. There has to be consideration. That's all. No, no. That GST next, Christopher, when he comes, right, you may have to talk to him on that. There will be a liability. Even though it is a barter system, there would be a liability, right? The valuation exercise and all those things, there will be a liability. Yeah. So, be, yeah. But the question is, if you enter into the question more than anything else, the minute you enter into a transaction, look at the complexities that you have here. Will it really give you that confidence to enter into transaction with all these things? Is what is the question? Correct. So, yeah. This is a kind of a discouragement from government. Definitely doesn't want to. They want to discourage. That is why they have said 30% taxes. It's it's loud and clear. Okay. Now, when it comes to this categorization, where will you classify this? As she was rightly mentioning, is it an investment or is it a current asset? Does it really matter? Anyway, we are paying, if it is a VDA, anyway, we are paying 30%. So when we are paying 30%, does it really matter whether I take it under capital gains or income from other sources or from business or profession? So it definitely matters where categorization, when the which head you are going to take, it definitely matters. Suppose you take it under income from other sources and the sources of that is not known, then it is not 30%. It goes into 115 BBE. right? So therefore, from that perspective, that classification, though it is 30%, but classification is very much important. Yeah. On the income. Cost deduction you will get. Cost deduction, but then other incidental expenses, whatever are there, that exchange commission and all those things you will not get as a deduction. But interestingly, just because he raised that, I would like to complete that. Okay, Bitcoin, I have kept it as, let's say, capital asset. I transfer that capital asset. So Bitcoin, let us say $100 I transferred. I acquired it at $50. That $50 alone is subject to tax. If you have paid, let's say, $1 as a commission to exchange, no, that is not allowed as a deduction, right? Any other expenses you have incurred, not allowed as a deduction. But my interesting mood question, Vivek, is another thing. Now you have held this Bitcoin for more than 3 years. It has become a long-term capital asset. I will sell it. I make some profit. $50 made some profit. That $50 I want to invest in a house property. 54F I want to claim. Can I claim? I take an extreme view, you can claim. That's exactly what I'm trying to say. If it is a capital asset, if it's a capital asset, I have held it for more than 30. I am not claiming any deductions. They say I will not allow you any deduction. Okay, I don't want any deduction. They say that no set off of carry forward. Those things also I'm not looking at it. I'm looking at exemption. I sold, I made some profit. It is a long-term capital asset. I want to invest in a house property. 54F I want to claim. What is holding me back? Virtual digital asset. If it is not a virtual digital asset, if it is coming as capital asset. So if something is not fulfilled as a VDA, right? And it is a capital asset. Now I sell that capital asset. I made a profit. Now can I go? I can still. Okay, suppose, yeah, correct. 1% on that 100. Yes. So, so these are, I mean, even though all those things no, I want under chapter 6A deduction, I want to claim ATG, others are chapter 6A deduction, ATC, ATD, and my entire income is comprising of only, from income from digital assets, virtual digital assets. Can I claim chapter 6A deduction? Absolutely. There is no restrictive provision. So therefore, to my mind, yes, we can still claim chapter 6A deductions. No. So we have tried to, what we have done is we have tried to, I have discussed all these things. Yeah. We have tried to put it pre-budget, how it happens, and post-budget just by up to 31st March 22. How it is going to happen is, let us say, buy date, sell date, quantity, buy price. There is expenses also, 1% of expenses. On sell also there is 1% of expenses. So therefore, buy value from 30 lakh, it is becoming 30.3 lakhs. And sell value gets reduced from 50 lakhs to 49.5 lakh rupees because of commission. So therefore, if it is up to 31st March, if you are traded in a crypto or any VDA, then the tax liability therefore comes to 7 lakh 9,000 because you are allowed that expenses. In next, if you look at post 1/4/22, there you will not get those expenses at all. So therefore, the tax liability is increasing up to 30 lakh rupees. Net capital gains is 30 lakhs, and on that tax liability will be up to 9 lakhs. And yeah, 5 more minutes. Okay, this is the last slide. I'll complete it. So another aspect that happens in this is if it is a gifted in year one, let us say it has been gifted, um, gift of VDA that happens to a recipient. The question is, can the recipient claim the cost of the previous owner in case of gift? Cost to the previous owner. Looks like there is no bar. I think we can claim. It is what is my understanding from the reading of this. And so that is one aspect I just wanted to put it. And of course, set off of losses. If you look at interhead set off of losses, it is not possible. Interhead, intra-head set off of losses also not possible. Intra VDA set off of losses, that is possible. If it is, as we discussed, Ethereum 1 and Ethereum 2, there is one is profit and another one is loss, that you can set off. But Ethereum to Bitcoin, you cannot set off. Or from, these Bitcoins to any other shares, or that also you cannot set it off. Okay. Set off of, yes. And I think lastly, I would like to take up on this. What happens if I lend VDA? I have lent a Bitcoin and you have borrowed it from me. So you pay interest on that. So it goes under interest computation, interest. So that's what the question is here. Can we so simply say that it is only a loan? And so therefore you are paying interest on that particular loan, and it has to go under a particular section for TDS, or it has to go under 194S because we have traded in this Ethereum. If it is in real currency interest component, we can easily do that. We go to respective section and deduct interest, TDS on interest. That's the easy part of it. Correct. 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 Yep. Yeah, you borrowed it, you invested elsewhere. You have to pay me interest, right? That interest component, what you pay, what is the TDS on that? Do we have to go under interest provision, or do we have to go to 194S and say that possibly we can take, if you are paying me rupees in currency, then possibly we can go under interest provision and claim it as a TDS. I mean, after deducting TDS, you can pay it. Suppose if you are paying that interest also in Bitcoin. Yeah. See, that question we have already discussed. Valuation, there is no solution here. That we have already discussed. There is nothing I can add. Okay. So I mean, I'm sure these are the things. As I said, I have taken quite extensive, quite extreme views. I have taken not because it is a right view. It is a view that possibility of being taken. That's all. Is there a possibility? Unless there is a clarity, there is a possibility of these extreme views being taken. And the very fact that the government says 30% access, they want to discourage transaction in this particular segment. They will not be hesitant in taking these extreme views. Is what I wanted to put it across to your consideration. I was just looking at how will it impact each one of us. Again, see, today people come to us for filing the return, and now one of the advantage they have is they already have 26 years, they already have information, they know what information is in possession of the department, and they also know when they come to us, we also know that what information is in possession of them. Now, suppose all this information, what department has, what I know, if it comes on a blockchain technology, do I really have to file the return? I don't have to even file the return because it is incorruptible peer-to-peer ledger. It is incorruptible peer-to-peer ledger. I don't even have to file my income tax return if it were to come on blockchain. Look at the entire transaction. My income tax, all income details are on blockchain. GST details are on blockchain. It is, you cannot change that particular, transactions. It is immutable. Do we really have to file the return? I don't think we need to really file the return if it goes to that logical extension. If this technology is taken to a logical extension by the department. And so therefore the question of reconciliation, 26 reconciliation is a huge challenge for any organization today. Large organization, they spend so much of money on this reconciliation, 26 years. So with this technology being there, this will be a thing of the past. And in fact, today when people talk about coming to us, they seek appointments. So if we were to be there on a blockchain and our calendar is there, you don't have to, they fix up and they come when we are free. Because it is immutable. You can't change, I had this and later on so it's a quite an interesting phenomena that we have. So while I don't say that all these things will have impact on chartered accountants to an extent that we become obsolete. The question is not that we don't become obsolete, certainly, because we have come with so much of a training behind us. We don't, but our services are required, albeit in a very, very different way. As I said, it requires in a very different way. Suppose if there is a VDA notified, and immediately can we talk to client and say that, hey, stop your money transfers through this particular exchange, do it through VDA. This is recognized by government. It's interesting when we are there and we are advising clients. As I said, it is in a different way. So these are some of the things that I thought I'll trigger some thought process as far as taxability of these virtual digital assets are concerned. As I said, there are many questions which are unanswered, and yes, for the VDA to flourish in this country, yes, these questions need to be answered. If it is not, government cannot take a decision of completely banning it, because it is impossible this particular transaction to ban completely. If you ban it, it goes underground. At best, what it will happen is it goes underground. But then if it has to go, there are certain aspects which requires a clarity, which if we get, I think it will give us a good, if we get a good clarity, I think this particular space can be utilized it in a much better manner for structuring the transactions, structuring the deals. In fact, we have what is that? Some of the deals, when it is structured, the money goes into a particular account, and only after the event that money gets transferred. All these things we can bring it under blockchain, and all these events get triggered upon completion of that particular event. The minute that event happens, it gets triggered and the money goes into the concerned person's account. Is something, as a technology, if you look at it, it has a huge potential to disrupt our profession. Yes. To disrupt this profession, yes, it has got a huge potential. But as I said, we will not go out of business, but then we need to render services in a very different way if it is taken to that logical end, this particular technology. With that, let me conclude my talk, and thank you very much for your patient hearing.
Thank you, sir. We have come to an end of excellent session. Sir briefed us on the subject very well. I thank sir on behalf of Bangalore branch of SIRC of ICI. Now I request our committee member CA Tuppat to hand over the memento to our speaker as a mark of respect and gratitude.